Imagine this. You're staring at your trading screen. You see the setup forming. Your analysis is clear. You click buy. At first, it moves your way. You feel good, confident, even brilliant. But suddenly, the market pulls back. Your heart starts racing. You freeze, watching your profit vanish. You close the trade too soon, only to see the market surge exactly where you expected. Now anger takes over. You jump back in, no plan, no stop loss, just revenge. And within minutes, the account you worked so hard to build is bleeding. Sound familiar? If you've been there, you are not alone. This is the hidden battle every trader faces. And this is why Mark Douglas wrote The Disciplined Trader. Because the greatest obstacle in trading isn't the market. It's you. Chapter 1, Why Most Traders Fail. Trading looks simple. Buy low. Sell high. Or sell high and buy back low. Charts move. Indicators flash signals. You place a trade. Yet, despite this apparent simplicity, 95% of traders fail. They fail not because they don't know where to enter. They fail because they cannot handle their own mind. Mark Douglas explains that trading is one of the few professions where the battlefield is psychological. In most careers, effort produces results. Study hard, pass the exam. Work late, get promoted. Train consistently, and your athletic performance improves. But in trading, you can do everything right. And still lose. You can follow your rules perfectly. And still get stopped out. This creates a psychological trap. The mind screams, if I did the right thing and still lost, maybe the rules don't work. So the trader abandons the rules. They experiment. They chase signals. They overtrade. And very quickly, they are no longer trading the market. They are trading their emotions. Chapter 2, The Emotional Roller Coaster. Think back to your first winning trade. The rush. The sense of power. The thought, this is easy. I've found the way to freedom. Now think back to your first painful loss. The shock. The disbelief. The feeling that the market cheated you. These two emotions, euphoria and fear, create the roller coaster that destroys traders. A winning streak breeds overconfidence. A losing streak breeds hesitation. And both states lead to irrational decisions. Mark Douglas stresses that unless you learn to detach from the outcome of a single trade, you will always be at the mercy of this emotional storm. The disciplined trader sees every trade as just one event in a long series. Wins and losses are part of the game. What matters is consistency of behavior, not the outcome of any one trade. Chapter 3, The Illusion of Control. Humans love certainty. We love to know what comes next. But markets are uncertain by nature. No one knows the next tick. Not the biggest bank, not the best algorithm, not the most experienced trader. And here lies the paradox. The more you try to control the market, the more it controls you. When you expect the market to behave a certain way, you set yourself up for emotional pain. You want certainty, but the market gives you randomness. You want guarantees, but the market gives you probabilities. The disciplined trader accepts this. They know. My edge will play out over many trades, not just one. I don't need to control the market. I only need to control myself. Chapter 4, Freedom versus Discipline. Here is the central conflict every trader faces. We come to trading seeking freedom. Freedom from bosses. Freedom from alarm clocks. Freedom to make money anytime, anywhere. But the irony is this. To gain freedom, you must first embrace discipline. Discipline means following your rules without hesitation. Accepting losses without emotional reaction. Risking small, consistent amounts instead of chasing jackpots. This feels restrictive. It feels like giving up the very freedom that attracted you to trading. But Mark Douglas shows us that discipline is not restriction. It is liberation. Because once you no longer fight your emotions, once you no longer chase every tick, you are free. Free to execute your plan. Free to think clearly. Free to enjoy the process of trading without emotional torture. Chapter 5, The Need for a New Mindset. The final foundation is this. Trading requires a mindset unlike any other field. In school, mistakes are punished. In trading, mistakes are learning. In jobs, effort equals reward. In trading, effort doesn't guarantee outcome. In society, winning means being right. In trading, winning means managing risk even when you are wrong. To succeed, you must reprogram yourself. You must build a new mental framework. Losses are normal. Outcomes are uncertain. Probabilities guide behavior. Discipline is freedom. Only then can you progress from emotional amateur to disciplined trader. Chapter 6, The Pain of Loss. Every trader knows the sting of a loss. It feels personal. It feels unfair. It feels like failure. But here's the truth. Losses are not the problem. Your perception of losses is the problem. Mark Douglas explains that traders often treat every loss as an attack on their identity. They see it as proof that they are not good enough. Or as punishment for not knowing enough. But in reality, losses are information. They tell you that probabilities played out in the other direction. They remind you that trading is a game of uncertainty. The disciplined trader accepts this with calm neutrality. They don't celebrate wins with wild joy. They don't mourn losses with despair. They simply log the result, and move forward. To become disciplined, you must rewire your relationship with loss. A loss is not failure. A loss is the cost of doing business. Chapter 7, Expectations and Reality. Imagine this. You enter a trade, fully convinced it will win. You picture the profit, the green candles, the account growing. Then, the market reverses. Your stop loss is hit. What happens next? Frustration. Anger. Self-blame. The pain is not from the loss itself. The pain is from the expectation you created. When you expect certainty in an uncertain world, you set yourself up for disappointment. The disciplined trader releases expectation. They know. The outcome of one trade is irrelevant. What matters is the next 100 trades. This mindset shift is powerful. Because once you no longer expect every trade to win, you are free from disappointment. You are free to follow your plan without emotional baggage. Chapter 8, The Cycle of Self-Sabotage. Here's a familiar story. You win a trade. You feel unstoppable. You increase risk on the next trade. That trade loses. Now you panic. You take another trade to recover. You lose again. Soon, your account is drained. This is self-sabotage. It happens because traders allow emotions to control decisions. Mark Douglas emphasizes that discipline is not just about rules. It is about breaking this destructive cycle. You cannot let one trade influence the next. Each trade must stand alone. Independent. Neutral. If you allow past emotions to carry over, you will always repeat the cycle of overconfidence and fear. Chapter 9, Belief Systems and Trading. At the core of your trading results is not your strategy, but your beliefs. If you believe the market is out to get you, you will act defensively. If you believe losses are unbearable, you will cut winners too early. If you believe you need to be right, you will refuse to exit losing trades. Your beliefs shape your actions. Your actions shape your results. The disciplined trader takes time to examine these beliefs. They ask, do I believe in probabilities? Do I believe that losses are part of the game? Do I believe in following my edge, regardless of short-term outcomes? Only when beliefs are aligned with market reality can discipline truly develop. Chapter 10, The Foundation Summary. So what is the foundation of discipline? Accept losses as business expenses. Release expectations of certainty. Break the cycle of emotional sabotage. Align beliefs with market reality. Embrace discipline as the path to freedom. This is the mindset you must build before you can ever hope to achieve consistency. Because trading is not a test of your strategy. It is a test of your psychology. Chapter 11, The Market is Neutral. The market does not care about you. It does not know you exist. It does not punish you when you lose, nor reward you when you win. The market is simply a collection of orders. Buyers and sellers meeting in a constant auction. That's it. Nothing more. Yet traders constantly personalize the market. They say, "The market tricked me. The market is against me. The market always turns when I enter." These are illusions. The market is not an enemy. It is not a friend. It is neutral. The pain we feel comes not from the market, but from how we interpret it. The disciplined trader learns to see the market as it is. A stream of opportunities. Indifferent to individual hopes and fears. Chapter 12, Projection of Beliefs. When you look at a chart, what do you really see? Lines? Candles? Indicators? No. What you see is a projection of your beliefs. A cautious trader sees danger everywhere. A hopeful trader sees opportunities everywhere. A fearful trader sees confirmation of disaster. The same chart can look bullish to one trader, bearish to another, and meaningless to a third. This is because markets are not interpreted objectively. They are filtered through beliefs, experiences, and emotions. Mark Douglas explains. To become consistent, you must recognize these filters. You must separate what the market is actually doing from what your mind wants it to mean. Only then can you make decisions based on reality, not projection. Chapter 13, The Trap of Certainty. Humans crave certainty. We want to know what comes next. We want guarantees. But the market offers none. Every trade is uncertain. The trap is believing that if you just study harder, or find the perfect system, you can eliminate uncertainty. This search for certainty leads to system hopping, indicator overload, and endless frustration. The disciplined trader knows. Certainty does not exist in trading. Only probabilities exist. When you release the need to be certain, you also release fear. Because you no longer demand the impossible. Chapter 14, Thinking in Probabilities. Here is the key shift in mindset. Instead of thinking, "This trade must win," you think, "This trade is one of many. Over time, my edge will play out." For example, if your strategy wins 55% of the time, you don't know which specific trades will win. But you know that across 100 trades, around 55 will be winners. This is probability thinking. It frees you from emotional attachment to a single outcome. It allows you to risk small, consistent amounts. It builds the foundation for long-term consistency. Mark Douglas reminds us. Professional traders do not care about the outcome of one trade. They care about executing their edge across many trades. Chapter 15, Detachment from Outcomes. Imagine two traders. Trader A places a trade, watches every tick, and feels anxiety rise with every fluctuation. Their emotions are tied to the outcome. Trader B places a trade, sets stop and target, and walks away. They know the result does not matter, because their edge will play out over time. Which trader do you think survives? The disciplined trader practices detachment. They see each trade as a small sample in a larger game. They do not celebrate wins or mourn losses excessively. They simply execute, review, and continue. This emotional neutrality is the mark of professionalism. Chapter 16, Market Reality Summary. To understand the market, you must accept. The market is neutral. You project your beliefs onto it. Certainty does not exist. Only probabilities matter. Detachment creates freedom. Once you internalize these truths, you stop fighting the market and start flowing with it. Chapter 17, The Inner Conflict. Trading is a mirror. It reflects back not just your skills, but your fears, your desires, your habits. One of the greatest conflicts traders face is this. We come to the market seeking freedom. Freedom of time, money, and lifestyle. But the very thing that delivers this freedom is discipline. Rules. Boundaries. Structure. This creates a psychological tension. On one hand, you crave independence. On the other, you must obey strict trading rules. Mark Douglas calls this the paradox of trading. Freedom comes only when you surrender to discipline. The market does not reward impulsiveness. It rewards structure, patience, and consistency. Chapter 18, Childhood Conditioning versus Market Reality. Our beliefs about success and failure are shaped early in life. In school, mistakes are punished. In society, being wrong is embarrassing. At work, effort is directly rewarded. But the market operates differently. You can make a perfect decision and still lose. You can make a terrible decision and still win. This disconnect confuses traders. They bring childhood conditioning into trading. I must avoid mistakes at all costs. I must be right to win. I must be rewarded for effort. But in the market, these beliefs are deadly. You must accept mistakes. You must embrace being wrong. You must detach effort from outcome. The disciplined trader rewires these old patterns to fit the reality of trading. Chapter 19, The Need to be Right. The strongest psychological barrier in trading is the need to be right. From childhood, we are rewarded for being correct. Good grades. Praise. Approval. Being wrong, on the other hand, feels like failure. Traders carry this into the markets. They hold losing trades because exiting would mean admitting they were wrong. They double down on bad positions to avoid the pain of failure. They chase revenge trades to prove themselves. But in trading, being right is irrelevant. What matters is making money over time. You can be wrong more often than you are right, and still profit. How? By managing risk, letting winners run, and cutting losers quickly. The disciplined trader does not seek to be right. They seek to follow their plan. Because over time, discipline beats ego. Chapter 20, Fear of Uncertainty. Most traders fear uncertainty. They want the market to give them guarantees. But guarantees don't exist. This fear shows up in hesitation. You see a setup, but don't pull the trigger. You enter, but close too early. You miss trades because you waited for certainty. Fear of uncertainty is paralyzing. It causes you to abandon your edge. It convinces you that if you just wait a little longer, the market will give you a perfect signal. But perfect signals don't exist. There is always risk. Always doubt. The disciplined trader embraces uncertainty. They know that each trade is just one event in a series. They manage risk so uncertainty cannot destroy them. And they trust probabilities to take care of the rest. Chapter 21, Overcoming Conditioning. So how do you overcome this old programming? Mark Douglas suggests 3 steps. Awareness, notice your internal reactions. Are you hesitating? Are you holding losers? Are you feeling the need to be right? Awareness is the first step. Reframing, change the meaning of events. A loss is not failure. It's feedback. Being wrong is not bad. It's part of the process. Uncertainty is not danger. It's opportunity. Practice, repetition rewires the brain. By executing trades according to plan. By treating losses with neutrality. By practicing discipline daily. You slowly reshape your trader identity. Chapter 22, The Trader's Identity. Ultimately, discipline is not just about rules. It's about identity. If you see yourself as a reckless gambler, you will trade recklessly. If you see yourself as a victim of the market, you will trade defensively. But if you see yourself as a professional, you will act professionally. You will follow your plan. You will manage risk. You will stay consistent. Mark Douglas teaches that your trading results flow from who you believe you are. Change your identity, and your actions change. Change your actions, and your results change. Chapter 23, Summary of the Psychological Structure. To master the trader's mind, you must resolve the inner conflict between freedom and discipline. Reprogram childhood conditioning that punishes mistakes. Release the need to be right. Embrace uncertainty instead of fearing it. Build a trader's identity based on professionalism. When you transform your beliefs, your discipline flows naturally. And when your discipline flows naturally, your trading results transform. Chapter 24, The Power of Probabilities. At this stage, the disciplined trader begins thinking in probabilities, not certainties. Every trade has an outcome that is unknown in the short term. The market is random in a single instance. But across many trades, patterns emerge. Imagine flipping a fair coin. You cannot predict any single flip. But across 1,000 flips, you know roughly 50% will be heads and 50% tails. Trading works the same way. Your edge is like a biased coin, it doesn't guarantee success every trade. But over hundreds or thousands of trades, it produces consistent results. Douglas emphasizes. Your mindset must shift from, will I win this trade? To, am I executing my strategy correctly? Focus on process over outcome. Trust that probability will take care of results over time. Chapter 25, Emotional Neutrality. Emotions are the enemy of discipline. Fear, greed, hope, and regret drive impulsive decisions. The goal is emotional neutrality. You do not fear losses. You do not crave wins. You remain calm and focused, regardless of outcome. Douglas recommends practical methods. Meditative awareness, notice emotional reactions without judgment. Detachment exercises, visualize taking a trade and let the outcome be irrelevant. Controlled exposure, practice small trades to learn emotional resilience. By training your mind to stay neutral, you stop reacting to the market. You start responding rationally. And rational responses lead to consistent profits. Chapter 26, Trusting Your Edge. Your trading edge is your advantage in the market. It could be a system, a setup, or a method that produces positive expectancy. The problem is psychological. You see a trade go against you. You doubt your system. You exit too early. Douglas stresses that you must trust your edge. A profitable strategy requires patience. You must let probabilities play out without interference. Trust comes from experience and repeated success in following your plan. The more you practice discipline, the stronger your trust becomes. Chapter 27, Daily Discipline Practices. Consistency in trading is built with daily practice. Douglas suggests creating routines that reinforce discipline. Pre-market preparation, plan trades, identify setups, define risk. Journal writing, document trades, thoughts, emotions, and lessons. Post-market review, evaluate execution without judgment, focus on process. Mindset exercises, meditate, visualize emotional control, affirm professional identity. Daily repetition rewires your mind. Discipline becomes habitual. And habits, not willpower, drive consistent performance. Chapter 28, Managing Risk for Discipline. Discipline is easier when risk is managed. Douglas emphasizes. Never risk more than you can afford to lose. Always define stop-loss levels before entering a trade. Avoid revenge trading after a loss. When risk is controlled, emotional responses diminish. Fear subsides. Greed subsides. You are free to follow your plan with clarity and confidence. Risk management is not just about protecting capital. It is a tool to reinforce discipline. Chapter 29, Avoiding Overtrading. Overtrading is a symptom of emotional imbalance. Traders often chase profits after a loss. Enter trades to prove themselves. React impulsively to market noise. Douglas teaches that discipline means waiting for the right setups. Quality over quantity. Patience over impulsiveness. The disciplined trader trades only when conditions match their edge. Everything else is ignored. This restraint protects both capital and psychology. Chapter 30, Summary, Building Consistent Discipline. To summarize Part 4. Think in probabilities, not certainties. Maintain emotional neutrality in every trade. Trust your edge and let it play out. Follow daily practices to reinforce discipline. Control risk to reduce fear and greed. Avoid overtrading, wait for high-quality setups. When these elements combine, discipline becomes a natural extension of your mindset. It is no longer effortful. It is habitual. It is professional. Chapter 31, Seeing Yourself as a Professional. The journey to becoming a disciplined trader is a journey of identity transformation. Douglas emphasizes. Your results flow from who you believe you are. If you see yourself as impulsive, you will trade impulsively. If you see yourself as a gambler, you will take reckless risks. If you see yourself as a professional, you will trade professionally. Changing your identity is not theoretical. It requires action, habit, and mental rehearsal. Affirm daily, I am a disciplined trader. I follow my plan. I manage risk. I stay neutral. Execute trades according to rules, even if emotions resist. Review mistakes neutrally, extract lessons, and move on. Your professional identity reinforces discipline. It replaces fear, doubt, and ego with confidence, clarity, and consistency. Chapter 32, Reinforcing Discipline Through Practice. Discipline is not innate. It is a skill, like riding a bike or playing an instrument. Douglas outlines 3 pillars of practice. Execution practice, place trades according to your edge, without deviation. Mental practice, visualize trades, imagine losses, and practice neutrality. Reflection practice, review trades, analyze deviations, and correct behaviors. These exercises train your subconscious mind. Eventually, discipline becomes automatic, requiring less conscious effort. Chapter 33, Case Studies of Discipline. Douglas shares examples of real traders. Trader A overreacts to each loss. They double down, chase trades, and eventually blow accounts. Trader B follows rules strictly, even when outcomes are uncertain. They may lose individual trades, but over time, profits compound. The difference? Psychology, not strategy. Disciplined traders understand that. Success is measured over hundreds of trades, not one. Emotional neutrality ensures consistent execution. Risk management protects both capital and psychology. Chapter 34, Long-Term Mental Training. The mind cannot be rewired in a day. Douglas emphasizes consistent, long-term mental training. Daily journaling, record trades, emotions, thoughts, and lessons. Meditation, develop emotional control and focus. Visualization, imagine handling winning and losing trades calmly. Affirmation, reinforce professional identity through repeated statements. Over months, this training creates a resilient trader mindset. You will naturally resist fear, greed, and impulsiveness. You will act professionally, even in stressful market conditions. Chapter 35, Integrating Beliefs, Rules, and Execution. Discipline comes when three elements align. Beliefs, you believe that losses are normal, uncertainty is inevitable, and probability favors consistency. Rules, you have a clear trading plan with risk management, entry, and exit rules. Execution, you follow rules consistently, detached from outcome. Douglas stresses. All three must be present. Beliefs without rules lead to random behavior. Rules without beliefs lead to emotional sabotage. Execution without either is luck, not skill. Chapter 36, Final Motivational Guidance. Becoming a disciplined trader is a journey, not a destination. Expect challenges. Expect mistakes. Expect emotions to rise. But remember, discipline is freedom. Probability thinking ensures long-term consistency. Emotional neutrality allows clear decision-making. Professional identity shapes actions, which shapes results. Mark Douglas reminds us. The market is neutral. Success is within your control. It is not about predicting every trade. It is about becoming the trader who consistently executes with discipline. Chapter 37, Summary, The Path Forward. To summarize the journey of Part 5 and the book as a whole. Accept the market is neutral, detach from outcomes. Reprogram old beliefs, release the need to be right. Think in probabilities, manage risk carefully. Maintain emotional neutrality through practice. Build a professional trader identity through action and affirmation. Follow your rules consistently, trust your edge. Embrace trading as a long-term journey of discipline and personal growth. When these elements combine, trading becomes less about stress, luck, or guesswork. It becomes a structured, professional activity. You become the trader the market respects, calm, disciplined, consistent.